Hi friends, welcome to Econ Masters. In the last 3 episodes, we were discussing what is sole trader, partnership and private limited companies. As a continuation, in today's episode, we are going to see what is a public limited company. So let's start our session. Public limited company is a limited company which can sell their shares to general public. This is the feature of public limited company which distinguish it from a private limited company. Private limited companies can't sell their shares to anybody outside. But in the case of public limited companies, they can sell their shares to the general public through stock exchange market. Now let's understand what are different advantages and disadvantages of forming a public limited company. The first advantage of public limited company is it can sell shares through stock exchange market. It is the main characteristics which distinguish public limited company from any other private sector business. The second advantage, that is, shares are easily transferable from one person to another, that is, through stock exchange market anybody can buy and sell shares. This is the second advantage. Now let's see the third advantage, that is shareholders have limited liability. So in the case of private limited company and public limited company, that is limited companies, they have limited liability. So this is also another advantage of public limited company. Then let's see the fourth advantage, that is public limited companies exhibit better managerial efficiency. It means since the company has a proper standard structure, all the departments in public limited companies usually perform in their best standard. The next advantage is more capital to do the business. Compared to any other private sector business, public sector business has more opportunity to widen their business because they are selling their shares through stock exchange market. Because of this reason, they can accumulate more capital to do the business. These are various advantages associated with public limited company, and now let's see what are different disadvantages of public limited company. The first one, decision take longer and there can be disagreement among the shareholders or directors. The second disadvantage, profit is shared among number of people. So we know public limited company is selling shares through stock exchange market, and dividend we are liable to pay, or the public limited company is liable to pay to all of these shareholders. So profit will be divided among all those shareholders. So it will be divided into smaller portion. That is another disadvantage of public limited company. Third disadvantage, it is highly expensive to setting up a public limited company, because we know public limited companies are large scale businesses. Definitely it need more capital to do the business, so it is highly expensive. The fourth disadvantage, that is they might experience difficulty in managing the business, because this is a large business. Definitely they need better managerial skill, then only they will be able to manage the business. Sometimes they will face difficulty in managing the business. So these are various disadvantages of public limited company. So friends, I believe that you got some basic information regarding what is a public limited company and what are different advantages and disadvantages of starting a public limited company from this particular lecture. So we will be meeting again another session with another important topic from economics or business. Till that, bye.